Hello and good morning. This is AI Host, bringing you the CBN Financial Market Update for November 21, 2025. Here, what's moving the markets and what investors should be watching as they make key decisions. Markets pulled back sharply yesterday after a wild ride. Early strength driven by Nvidia's strong earnings faded into a steep reversal, with major indexes closing deeply in the red. The S&P 500 fell about 1.6%, the Nasdaq dropped around 2.2%, and the Dow lost nearly 0.8%. At the heart of the volatility, Nvidia. Despite beating expectations and issuing strong forward guidance, the stock ended the day down roughly 3.2%. That reversal seems to have shaken investor confidence in AI capex, driven trades more broadly. Other major AI-related names also suffered, AMD, Micron, and Oracle among them. Compounding the sell-off was growing skepticism about another Fed rate cut in December. Stronger than expected jobs data in recent months, especially the September report, is giving markets pause. This has raised doubts about further easing, even as some Fed officials leave the door open. New York Fed President John Williams suggested there may still be room for a near-term adjustment. Volatility is ticking higher. The VIX, Wall Street's fear gauge, jumped more than 11%, ending the day at its highest level in months. This surge in risk aversion suggests many investors are choosing defense over offense right now. In sector news, retail offered a glimmer of strength. Walmart impressed with earnings and raised guidance, helping buffer some of the broader market weakness. On the other hand, AI infrastructure firms are being closely scrutinized. Questions are rising about whether the current AI spending wave is sustainable. Meanwhile, Oracle grabbed attention with a massive potential contract, a reported $30 billion year cloud deal, which could reshape its longer-term growth trajectory. Looking ahead, here are some key themes and potential strategies for investors. Risk management. With volatility elevated, defensive positioning may be warranted. Consider balancing exposure between growth, AI, plays, and more stable, cash flow-generating names. Fed Watch. Monitor developments around rate policy carefully. Evolving signals from Fed officials could shift market sentiment quickly. Selective growth. Not all tech names are equal. While AI stocks remain a big bet, investors may want to focus on companies with strong fundamentals, manageable valuation, and realistic capex plans. Macro data. The labor market remains in focus. Any new data on job growth, wages, or inflation could move expectations for rate cuts or hikes. Bottom line, yesterday's sharp reversal is a reminder that even blockbuster earnings can't fully insulate markets from macro risks. The interplay between AI optimism and rate uncertainty is creating a tricky environment. And as we head into today, investors would do well to stay balanced,